Welcome to ETF Market Insights, the ultimate destination for Canadian DIY investors eager for the latest on ETFs and the economy. Join us every week for timely insights and actionable strategies, all brought to you by BMO ETFs and our experienced panelists. Don't forget to subscribe, and let's jump right into today's episode.
Welcome to ETF Market Insights. I'm Danielle Nuzzle with BMO ETFs. Thanks for joining us today. Today, we want to know, are Canadian equities the maple syrup that your portfolio might need? Is that little bit of sweetener that you can add to your portfolio? To break it all down, we have Val Grimba from RBC Capital Markets with us. But before we get started, I want to remind you, today we're not providing you any investment advice. These are not investment recommendations. Our goal is to build your knowledge base, provide information for you, the Canadian investor, so you can manage your portfolio the way you want with your own objectives and goals. Buy Canada has been a huge theme this year. Canadians are looking for Canadian products at grocery stores. They're staying inside Canada for travel and vacation and doing everything they can to keep their dollars inside the Canadian economy. This trend has persisted within the stock market, where we are seeing Canadian investors look to Canadian listed stocks or Canadian companies to put their dollars to work or to add to their portfolio. So here to give us a look at what's driving this trend is Valerie Grimba. Valerie is one of our ETF market makers, and she's also the director of ETF strategy at RBC Capital Markets. Thanks, Val, for joining us today.
Thank you for having me, Danielle. Excited to be here.
Well, Valerie, you have a very neat perspective on markets because as an ETF market maker, you can actually see in a real-time basis the flows, where people are spending their money, what they're buying, and what they're selling. Now, we are seeing Canadians at the supermarket buy Canada, but what about the stock market?
It's absolutely translating real world, real time into the equity market at large, the Canadian fixed income market as well. And we're seeing that especially through the world of ETFs. So just to set the stage and give an order of magnitude here, last year we saw at this point in the year about $2 billion flow into Canadian ETFs that hold Canadian securities. That was a tick up from the year prior. But this year, we've already seen $6 billion of inflows into Canadian product. And so that's, a 3x over last year. And we've also seen that pick up on a relative basis as well. So as a percentage, last year, ETFs that hold Canadian underlying represented about 3.5% of all ETF flows in the Canadian market. But this year, ETFs holding Canadian securities represents, I think it's about 7% or 8% of overall flows. So it's, again, a doubling on a relative basis as well. So we're definitely seeing investors put money to work in the Canadian market. And I think that's a combination of a few things. First of all, a little bit of patriotism and investors kind of waking up in this climate saying, I want to own more Canadian securities. And then also a bit of dip buying and a market that is doing well and outperforming.
Really interesting, Val. So kind of a mix of patriotism, but also dip buying, Canadian investors looking for value versus maybe an overpriced or overvalued U.S. market. That leads me to my next question. So where exactly are Canadian investors putting these dollars to access Canadian equities? Specifically, what ETFs are they using to get this exposure?
Yeah, it's really fascinating. And I would say there's kind of three clear buckets that stand out from our perspective. So first of all, it's just kind of broad Canadian equity market exposure. So you can get something like that through ZCN, which has been a strong performer year to date. It's almost up 20% in 2025 so far. So I think, so you're kind of seeing a bit of performance chasing and participation in that in that rally. The other bucket we're seeing clear inflows into is actually Canadian factor-based products. So these are products that are taking a specific tilt. So we've seen a lot of interest in the low volatility products. So Canadian low vol through ZLB. And then we've seen big inflows into Canadian fixed income, 18 billion this year, which is nearly double what we saw into Canadian fixed income last year. And that has primarily been in the shorter end of the curve. Again, there's some interest rate volatility. Rates are moving lower. And so we're seeing people kind of also put on a bit of a safety trade towards the shortest end of the curve. So something like ZMMK, which is money market, very low duration, and also ZST, again, ST standing for short term and kind of getting into that part of the curve.
Interesting. So Canadians not only looking to Canadian equities, but also Canadian bonds as well in their portfolios this year. Okay, let's talk performance. Most of our investors watching today are very focused on performance. Has this trade paid off this year? And how has the Canadian equity market fared versus other regions, specifically US?
Yeah, so definitely relative to the US, it's been A, more stable, and B, outperformed. And I think, again, that kind of talks to the fund flows we've seen as well. It's a bit of a step away from the US exceptionalism trade that really was the de facto exposure you needed in 2023 and 2024. It was, listen, if you didn't have Mag 7 in your portfolio, you were underperforming. But the trend has shifted this year. And then kind of with this hometown bias, domestic kind of spin towards it is kind of twofold. And then there's also natural tailwinds there as well. Canadian companies have lower valuations than U.S. companies, so you can see it maybe investor bias towards that. And we also have a larger weighting towards financials in our equity market. They've also performed very well this year. And then, of course, natural resources, and the story there being, of course, gold rallying 40% year to date, massive move. And we've seen that translate into the relevant equities on that side.
So perfect leads me perfectly into our next question. The Canadian market looks a lot different from a sector's perspective than the US market. So a lot of Canadian investors like adding Canadian equities to their portfolio. Yes, for that patriotism trade. Yes, for that maybe valuation trade, but also to diversify the sectors that they have. If they're only owning US equities, they can add a few other sectors with the Canadian equity side of things. So for investors who might be a little more tactical, maybe want to make a play where they can find some alpha or find a market opportunity, what are your thoughts on these sectors in the Canadian market? And then what ETFs kind of provide exposure to these specific sectors?
Yeah, and we kind of hit high level on this in earlier question. And so again, I think there's three key sectors that we are keeping an eye on. First and foremost, of course, is gold miners or just materials in general, but those that are related to pulling gold bullion out of the earth. They generally have a little bit more torque than owning the underlying physical commodity itself. And so we've seen that in performance. Gold is up 40%, but the miners and the material sector is up 60%. And it's actually been a big contributor to the kind of ZCN, the Canadian composite outperformance this year. We do think there is still legs to this trade. Again, these companies are being more conservative with their capital and balance sheet. Again, still trading at lower valuations than we saw at different times in the cycle or the last time we saw gold rally in this meaningful way in 2009. And a great way to kind of get exposure here is actually through ZGD, which is the BMO Equal Weight Gold Index. And that has outperformed the material sector at large. Again, you're kind of filtering for that gold exposure first and foremost. And the equal weighting has given a little bit more torque to the smaller companies. And so we've seen ZGD is up, I think it's over 100% year to date. And so interesting way to slice that universe and actually get some outperformance this year as well. The other areas are, of course, Canadian financials. ZEB holds Canadian banks, again, equal weighted. So you don't have to pick your favorites. You're just kind of getting broad exposure here to Canadian financials, Canadian banks, in particular through ZEB. And again, it's great, set it and forget it. And then lastly, of course, is our oil and gas exposure. It's been a bit more of a mixed bag on that side of things, but again, potentially more opportunity there because of that. We do think there are some nice tailwinds politically and just kind of against what's going on right now from a macro backdrop that could benefit the oil and gas sector, specifically here in Canada as well.
So for Canadian investors, Valerie, who are still going to look outside of Canadian equities, they have to think about their currency exposure. So they're using Canadian dollars and buying either U.S. equities or international equities. What are you seeing on your side from that currency or foreign exchange perspective, and how should Canadian investors look at this right now?
Yes, and it's a great question, especially because 2025 has been so dynamic from a Canadian dollar point of view. So, great benefit about being able to invest in Canadian listed ETFs is that oftentimes we have multiple versions, and you can have an unhedged version of international underlying securities, or you can get a Canadian dollar hedged version. This year, like I said, the Canadian dollar has been moving around directionally quite a bit. And so when it comes down to owning US underlying securities, you've actually been better off so far this year owning a Canadian dollar hedged version. And that's because the Canadian dollar has strengthened relative to the US. And so by being unhedged, that actually the Canadian dollar return eats into the overall performance. So just for example, if we're comping what the TSX Composite has done this year, it's up 19% sure, Canadian dollars. But when we look at it, US performance from a Canadian perspective, ZUE is the Canadian dollar hedged S&P 500 ETF. That's up 12%, which is on par with S&P $500 exposure in US dollars. But ZSP is unhedged and it is only up 8%, again, kind of reflecting the move in the Canadian dollar. What's even more interesting, I think, this year is that the reverse is true if you're owning European equities. So actually, the euro has strengthened a lot relative to the Canadian dollar this year. So if you are owning European equities, you would want to be unhedged because then you get an additive performance from that euro strength.
Great. Thanks for that, Val. Definitely a big consideration for Canadian investors when you're looking to invest outside of Canada. Always remember that you're looking at a security return and the return of the currency where that security is domiciled when you look at your total return. Always an option for Canadians to hedge away that currency risk if you would like to do so. Okay, Valerie, last question here. I'm going to shift our conversation a little bit. So I'd like to shift away from kind of talking about buying pure Canadian equities, which has kind of been the theme of today's chat. But let's talk a little bit about actually buying a Canadian listed ETF versus a US listed ETF. A lot of investors at home often are buying US listed products, and there are some nuances there to be aware of. So what can you tell us there?
Yeah, again, it's not a one size fits all solution here, but there are very real considerations for a Canadian investor when it comes down to this. And I think part of the Buy Canada has also trickled down to can I even own US assets or foreign assets, but kind of repatriate that or do that through a Canadian structure or Canadian vehicle. And so, of course, owning a Canadian listed ETF is one way to do that. And I'd say that there are tax implications, but we would say, of course, consult your tax advisor. These are all personal, but there are material kind of tax considerations that an investor should take into account when comparing Canadian and US listed ETFs. But the one thing that comes front of mind to me is really just the FX exposure. And we talked about this. Sometimes you have people come in and say, listen, this ETF is 10 basis points management fee here in Canada, but it's 3 basis points in the US. Why should I not? I'm just going to go for the lower fee ETF. But what they fail to take into consideration is that they're going to have to change their Canadian dollars into US dollars to purchase that ETF. And that's going to cost them 200 basis points to just switch the currency across, right? So there's a very material charge that can come with doing an FX exposure change. And then you're not saving 7 basis points. You're in the whole 193 basis points just to start. So I would just say, there are some very real considerations. Don't just go for the lowest cost or the highest ADV. Oftentimes in Canada, we can get the same level of execution on a Canadian listed product that holds the same underlying securities.
Some awesome points there. Thanks for sharing those. Valerie, it was so good to have you on the channel. It was great to see you again. Thanks for all your insights on buying Canada today.
Awesome. Thanks for having me, Danielle.
And we'll see you next time on ETF Market Insights. Take care.
Thank you for tuning in to this week's episode of ETF Market Insights. Don't forget to hit that subscribe button and sign up for alerts so you never miss our latest content. For more insights and to keep the conversation going, visit us at etfmarketinsights.com. Join our mailing list and explore a wealth of resources and tools designed just for ETF investors. Until next time, stay informed and empowered in your investing journey. This session is for informational purposes only. Any reference to a particular company or product is for illustrative purposes only and should not be considered as investment advice or a recommendation to buy or sell. Particular investment and/or trading strategies should be evaluated relative to the individual's investment objectives, and professional advice should be obtained with respect to your unique circumstances.